Good morning to all. I'm Gomati from Corporate Department. Now I take the topic as bank accounts. First one is bank. What is meant by bank? It is a comprehensive term for a number of institutions carrying on certain kinds of financial business. It is defined as a valuable safely. The money is being paid out on the customer's order, that is checks. The Banking Regulation Act defines banking as accepting for the purpose of lending or investments of deposits of money, draft or order or otherwise. First one is, the Bank Regulation Act defines accepting for the purpose of lending or investment the deposits of money from the public, repayable on demand or otherwise, or withdraw by check, draft, order or otherwise. Therefore, any company which engages itself the manufacture of goods or carriers on any trade and accept deposits of money from the public of financing its business activities will not be treated as doing business of banking. Next one is, what are the business of banking companies? First one is borrowing, raising or taking up of money. Next one is lending or advancing money, granting and issue of letters of credit, traveler's check and circular notes, buying, selling and dealing in bullion, buying and selling and commission, underwriting and dealing in stock, shares, debentures, bonds, etc. It buy money from deposits and sell it borrowers. What are the forms of businesses? That is borrowing, taking or raising up of money, lending or advancing money, collecting and transmitting of money and securities, carrying on transaction every kind of guarantee and indemnity business, guaranteeing and issuing letters of credit, traveler's check and circular notes. What are the legal requirements are followed by banking companies? That first one is prescribed form. As per section 29 to 33 of Banking Regulation Act, every banking company is required to prepare a balance sheet in accordance with the form set out in third schedule and profit and loss account and conformity with form 15 of the same schedule. The format have been revised April. In other words, the final accounts for the year ending 31st March and onwards to be prepared in the new format. The next one is accounting year. On account of amended provision of Income Tax Act, every company closes its accounts on every 31st March. Every financial errors also 31st March. Now a banking company also closes its accounts on 31st March each year. Next one is prohibition of trading. A banking company cannot directly or indirectly deal in a business of buying or selling or bartering of goods except in connection with the realization of security given or to be held by or engaged in any trade or buy, sell or barter goods or otherwise then in connection with the bill of exchange received for a collection or negotiation for the administration of estates as executor, trustee or otherwise. Then next one is non-banking asset. Non-banking company may have take possession of a certain asset charged in favor of asset account of failure of debtor to repay the loan time. A banking company cannot hold any immovable property, however acquired except for its own issue. For any period exceeding 7 years from the date of acquisition, gain or loss on sale of such an asset has to be shown separately in profit and loss account of the banking company. Next one is share capital. In order to ensure that no banking company commences or carry a business with a weak and vulnerable capital structure, it lay down a limited paid-up capital and reserves to be compiled with by banking company which wishes to commence or carrying on business in India. Next one is, what are the types of banking companies? In case of banking company incorporated outside India, it has a place or places of business in the city of Bombay or Calcutta or both. If the places of business elsewhere, that is, in case of banking company incorporated in India, there are some of the points have to be made. If it has a places of business in more than one state, and it has a places of business in Bombay or Calcutta or both. If it has a places of business in more than one state, but not in Bombay or Calcutta. If it has places of business in one state of which is situated in the city of Bombay and Calcutta for the principal place of business, plus in respect of each of its other places of business situated in the same district. in place in respect of each place of business situated elsewhere in state, otherwise than in the same district, subjected to an overall limit of 5 lakhs. If it has one place of business and also not in a Bombay or Calcutta, if it has a place of business in one state or more, which is situated in the city of Bombay or Calcutta, in respect of each place of business situated outside the city of Bombay or Calcutta, may be subjected to over limit. There, the sum of the aggregated value of paid up capital and receipts, that is 20 lakhs, 15 lakhs, 10, 5 lakhs, 10 lakhs, 10,000, 25,000, 50,000, 5 lakhs, and 25,000, and 10 lakhs. And next one is reserve fund. Next one is payment of a dividend, payment of commission, brokerage, etc. Charge on uncalled capital. Next one is subsidiary companies, cash reserves, statutory liquidity ratio, loans and advances. Next one is how to prepare the profit and loss account in banking companies. First one is form B, third schedule, form of profit and loss account. From profit and loss account for the year ended 31st March. First one is first they have in banking companies there are totally 16 schedules. The first one is in 13 schedules. In last 13, 14, and 15, 16 are profit and loss account. Then up to 12 are balance sheet. First one is income. Schedule number year ended both current year and previous year. First one is income. Interest earned 13 number, schedule number 13. Next one is other income, schedule number 14, the total value. The next one is expenditure, interest expended, schedule number 15. Operating expenses, schedule number 16. Next one is provision and contingencies, then the total value. Next one is Roman letter 3, profit or loss, net profit or loss for the year. Next, profit brought forward, total, then total value. Fourth one is appropriations. If any amount to be transfer to reserves, then value. That is a 25% of reserves in transfer to every year profit. Transfer to other reserves, transfer to government or proposed dividend, balance carried to balance sheet total. This is the format of profit and loss account of banking companies. The next one is schedule. This is the format. This is the schedule to be annexed with profit and loss account. First one is schedule 13, interest earned. First one, interest or discount advances or bills, income on investment. That is interest earned means interest income is come from schedule number 13. Interest on balances with RBI and other interbank funds, others. Next, schedule number 14, other income. First one is commission, exchange and brokerage. Profit on sale of investment, less loss on sale of investment. Next one is profit on revaluation of investment. Fourth one is profit on sale of land and building and other assets. Next one is less loss on sale of land, building and other assets. Next one is profit on exchange transactions. Next one is income earned by way of dividend from subsidiary companies and our joint venture abroad in India. Next one is miscellaneous income total. Next one is schedule number 15, interest expended. That is interest expenditure. Interest on deposits, interest on RBI, interbanking borrowings, others total. Next one is schedule number 16, operating expenses. Operating expenses. First one, payment to and provisions for employees, rent, taxes and lighting, printing and stationery, advertisement and publicity, depreciation of bank property, directors' fees, allowances and expenses, auditors' fees, allowances and expenses, law charges, postage, telegram, telephone, etc., repair and maintenance, insurance and other expenditure. Some of the guidelines given by the RBI for profit and loss account. First one is interest earned. Interest or discount on advances of bills. It includes interest and discount on all types of loans and advances like cash credit, demand loan, overdraft, export loans, loan domestic and foreign bills purchased and discounted, overdue interest and also interest subsidy if any relating to such advances or bills. Income on investment. It includes all income derived from the investment portfolio by way of interest and dividend. Interest on balances with RBI and other interbank funds. It includes interest on balances with RBI, call loans, money market placement, etc. Then schedule number 14, other income. Other income, commission, exchange, brokerage, all remuneration, commission, on collection, commission, exchange on remittance, transfer, commission on letters of credit, letting out of lockers, guarantee, commission, government business, commission, agencies, etc. Next one is interest expended, that is interest on deposits. It includes all types of deposits, including deposits from bank and other institutions. Next one is interest on RBI, interbank borrowings, that is discount, interest or all borrowings and refinance from RBI and other banks. Others means discount or interest on all borrowings, refinance from other banks, refinance from financial institutions. Then other permits like interest on participation certificate, penal interest paid may also be included here. Next one is operating expenses. Payment to provision for employees, rent, taxes and lighting, printing and stationery. And these are the some of examples. I gave only one example for law charges. All legal expenses and reinvestment of expenses incurred in connection with legal services are to be included here. Then next one is a Form A, format at a balance sheet. Next one is a format, balance sheet format. That is totally 12 schedules. The first one is capital, second one is reserves and surplus, third one is deposits, fourth one is borrowings, fifth one in other liabilities and provisions. Next one is asset, cash and balances with RBA, balance with banks and money at call and short notice. Next one is investment. Next, ninth one is advances, 10th one is fixed asset, 11th one is other asset, then the total value. 12th one is contingent liabilities, bills for collection. First, schedule number 1, capital. For nationalized banks, capital for banks incorporated outside India, first Roman letter 1 for nationalized banks. Second one for bank incorporated outside India. Then some of the examples are given under this format. The next one is schedule number 2, reserves and surplus. Statutory reserves, opening balances, additions during the year, deductions, capital reserve, share premium, capital reserve, share premium. The next one is reserves and other reserves. Next one, schedule number 3, deposits. First one is demand deposits from bank, from others, savings bank deposits, term deposits from bank, from others. Next one is deposits of branches in India, deposits of branches outside India. Next, fourth one is borrowings in India, some that is RBI, other banks and other institutional agencies. Borrowing outside India. Next one is schedule number 5, liabilities and provisions, bills payable, inter-office adjustments, interest accrued, others. Next one is schedule number 6, cash and balances with RBA, cash in hand, balances with RBA in current account, in other account. Next one is schedule number 7, balances with banks and money at call and short notice. In India, balances with bank in current account, in other deposit account, money at call and short notice with bank and other institutions. Next one is outside India, in current account, in other deposit accounts, money at call and short notice. Next one is schedule number 8, investment. That both investment in India and investment outside India. Investment in India, that is government securities, other approval securities, shares, debentures, bonds, subsidiary books, and other investment. Then in government securities, investment outside India, that is government securities, subsidiary, auditors, other investments, etc. Next one is, ninth one is advances. Advances means bill purchased and discounted, cash credit, overdraft loans, term loans secured by tangible assets, covered by bank or government guarantees, unsecured. Next one is advances in India, priority sector, public sector, bank sector, others. Advances outside India, due from bank, due from others, discovered, syndicated, others. Next, 10th one is fixed asset. Fixed asset means premises, directions during the year, depreciations, other fixed asset, including furniture and pictures, additions during the deductions, if any deductions are made in the CR, depreciation, that is are made in fixed asset. Then other assets, inter-office adjustment, interest accrued, tax paid in advance, stationery and stamps, non-banking assets secured in satisfaction of claims, others. Next, schedule number 12, contingent liabilities. The last schedule in balance sheet, schedule number 12, contingent liabilities. Claim against the bank, acknowledgement to deducts debts, liabilities for a partly paid investment, liability of account of outstanding forward and endorsed contracts, guaranteed due on behalf of constraint in India, outside India, acceptance, endorsement, and other obligations, other items for which banking companies is made. In some of the guidelines are given in a RBI for balance sheet, that is some of the guidelines for RBI capital as to be given. The changes in above times for during the year, say fresh contribution made by government, fresh issue of capital, capitalization of reserves may be explained in this. Next one is some of the notes given in every schedules. The first, next one is movement in various category for reserve should be shown as indicated in the schedule. Next, schedule number 3, some of the notes are given by RBI, that is interest payable on deposits which is accrued but not due, should not be included but shown under other liabilities. Mature time deposits and cash certificate should be treated as demand deposits. Special scheme should be included. Special scheme should be included under term deposits if they are not payable on demand when such deposits have matured for payment. Should be shown under demand deposits. Next, deposits from bank will be included. Deposits from the banking system in India, cooperative banks, foreign banks, which may or may not have presence in India. Next, fourth one is borrowings. Some of the notes is given in a RBI, that is the total of Roman letter 1 and 2 will agree with total borrowings shown in the balance sheet. Inter-office transaction should not be shown as borrowings. Funds raised by foreign branches, by of certificates of deposits, notes, bonds, etc., should be classified depending upon documentation as deposits, borrowings, etc. Refinance obtained by banks from RBI and various institutions are being brought on the head borrowings. Hence, advances will be shown at the gross amount on the asset side. Next one, fifth one, other liabilities and provisions. As notes, for arriving at the net balances of inter-office adjustments, all connected inter-office accounts should be aggregated and net balance will be shown and representing mostly items in transit and unadjusted items. The interest accruing on all deposits, whether the payment is due or not, should be treated as liability. It is proposed to show only for pure deposits under the said deposits, and hence all surplus provision for bad and doubtful debts, contingency funds, secret reserves, which are not treated of relative assets, should be brought under the heads others. Next one, sixth one, cash and balances with RBI. Next one is balances with bank and money at call and short notice. If balances with RBI, totally current account and other account. Next, seventh one, balances with bank and money at call notice. In India, the current account, deposit account, it includes all balances with bank in India, including cooperative banks also. Next, money at call and short notice with the bank, with other institution, it include deposits repayable within 15 days or less than 15 days, notice lent in an interbank called money market. Then outside India, both current deposits, current accounts and deposit accounts. Next, eighth one, investment. Next, eighth one, investment. Ninth one, advances. 10th one, fixed asset. 11th one, other assets. 12th one, contingent liabilities. Thank you. Thank you to everyone.